Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm live on the floor with my friend Sam Huszczo. He is founder of SGH Wealth Management. Sam, thanks for stopping by.
Of course. Thanks for having me.
So, look, your firm, SGH, you actually have had national recognition this year. Can you tell us a little bit about that and where this is all coming from?
Yeah. So we got recognized as one of the fastest growing firms in the country by both Investment News, USA Today, and some other outlets. And I'm in New York today because I'm up for Investment Advisor of the Year award from Investment News as well, too. So,
well, congratulations.
Yeah.
We got to know each other through ETFs, no shock,
Absolutely.
And your use of ETFs. But I want to talk a little bit about the markets. What are some of the key concepts that you and the team at SGH are looking at right now, and how are you using ETFs to sort of, express your views?
Yeah. So as CIO, we're factor-based quant investors. So we believe in mean reversion, even though it doesn't always happen in the time frames that you want it to, obviously, but also kind of diet contrarian. Regular contrarian, too much calories, too much sugar for us. So we're just underweighting and overweighting based on things that fall slightly out of favor. But within factors, that's value and growth. Those are the two sides of the coin. And so you got to constantly be innovating new ways to get into value and growth, because things that get used too much lose their efficacy. But also, too, in a moment like this, you don't want to chase the shiny object. 49% of new factors actually show negative alpha once they get out of sample. So it's about refining what you're good at already and not questioning that. And where I'd say ETFs come into play is the execution of those strategies. If you have hundreds of investments and then a moment happens you need to trade, it can almost be investment paralysis, and you can not know where to really turn at that point. And shout out to all my ultra high net worth investors out there that advisors are putting them into like SMAs or direct indexing with hundreds of investments, and their IRA has this comical less than 1,000% holding that's not going to change their net worth at all. But what it does change is makes it hard to make big change in the portfolio. So where ETF wrappers come in phenomenally is we can make those changes when changes are necessary. So
one of the things that's really interesting, BBH just put out their 11th annual ETF survey, and one of the items that came out was what advisors look for from ETF issuers. And I was curious, while we have you, are there key things that you look for when you're considering ETFs?
Well, I'd say the germination of ETFs came from low expense ratios. So I know that all the new issues are getting into active and other areas, but I'd also say you have to know your role as an advisor. I have a CFA background. I can run the assets myself. So I just use them as more of an easier trading tool for the account size that we have. And so with that, expense ratio is very critical, but the due diligence of understanding factors is a lot of work. I think a lot of factors get coined as pure, but pretty much all of them are multi-factor. If there's not a quality screen on a factor, I don't want to rest all of my laurels on one thing working. And so you do need to do great due diligence to understand the multiple layers of the factors within it.
So let's take out the crystal ball for a moment. Let's look forward. Next 5 years of financial advice, the industry, what are you looking for?
Well, 5 years out, I think one less than popular take is I might not see AI as earth-shattering as maybe everybody's taking it today. It's certainly evolutionary. It's changing the way that we do business, but I don't think it's the French Revolution that it's being pitched at the moment. Certainly has its place. It can analyze data faster than a human can. So how that's applied in factors is, let's say you want to overweight stocks that have been mentioned positively in the news over the last 3 months. Well, AI can scour every news source and get you that number within seconds. And so it can be great for those data type of centric usage, but it can't tell you how to invest, because one part of investing is stick-to-itiveness and not capitulating. And a computer is not going to tell a person to not sell when the markets are down low. And so it's good at refining a process, but it's not good at defining the process. And so that's where I would say that lays. And in terms of wealth management specifically, I view this as robo-advisors part 2, the remix. They said robo-advisors were going to put financial advisors out of business. Years later, they're the ones filing for bankruptcy, and human connection is still here and thriving. And similar to, say, like TurboTax. TurboTax, it was going to put all accountants out of business. Now there's more accountants than before TurboTax came out, and more demand for them as well too. And if AI does turn into a little bit of a bubble, which I don't think we're at yet, looking back at the 90s tech bubble, when PE ratios were at like 27, 29, similar to today. That was 1992. And if people sold out, they would have missed out on a 424% return thereafter. So this is not a time to get too concerned, but maybe something where, it's natural for us to get overexcited about a new technology and things and maybe calm down a bit. And as a sidebar, I'd say I wish we could focus AI to getting my laundry done and doing my dishes as opposed to trying to take my highly technical job. I'd be all for it if it was doing that. But going after me first, I might also be a little defensive as well, too.
Got it.
Yep.
Well, good luck at the award ceremony tonight. Yep. Thanks for coming and stopping by. Now, one of the things Sam brought up is the idea of education around advice. As a reminder, if you're looking to become a certified ETF advisor, a CETF, you can do it all at our website, etfcentral.com. Just click on the ETF Institute. You'll find out everything there is to know about becoming a CETF. Brought to you by the New York Stock Exchange, the home of ETFs.